My man, what's up?
Hey, how are you?
I'm doing great.
You
I'm
hear
just so
me?
yeah, I can hear you. Can you hear me?
Yep, we're
Okay,
good.
sweet. Yeah, it was a bummer. PP's busy, so there's so much that's been going on. I figure we gotta talk about it, and
Yeah,
yeah, so
I know Bobby's been dropping some documents today, and Kinky Sex as well, the court case. So there's a lot to jump into, my man.
yeah, sweet. I'm not sure if it's also live on X. I haven't actually streamed from here in a bit, so if anyone knows.
Um,
Oh, actually, I do see it. Someone in the chat.
do you?
Okay, yeah, cool. Oh, sweet. S- um,
Just trying to see if I see it there.
So, funny thing, I did a little oopsie. Um, let's see. I'll share my screen. I kind of I feel bad. I hope I didn't get anyone in trouble or anything. But I don't know if you saw this. Let me just so whoops. Um, so posted something. Back pre-order the chromatic and mod mod retro. So I said, what a coincidence that lawsuit preventing GameStop from doing acquisition was dismissed today. Dot, dot, dot. Can you see Gmerica? And I don't even know. But when I went back, like about, you know, 30 or 40 minutes later, they deleted it
No way.
from their Facebook as well.
Really?
So, yeah.
Wow.
So I think
Stirring up
that,
shit, Michael.
yeah. I think that, you I came into this whole thing. I learned about Ryan Cohen through Bed Bath and Beyond, right? Like I was I wasn't even at all on Reddit, seeing, and so I don't know. I didn't know that there was like a history. I didn't know the history with BCG. I mean, I guess a lot of people didn't really know there was either, but it had been started ever since Bed Bath and Beyond. Ever since Ryan Cohen wrote a letter to Bed Bath and Beyond, they came in. So they saw the writing on the wall, and they that
You're robot in my.
shoot. How about now? Is that better?
Yeah, it's better.
Okay. Yeah. So I think that they saw the writing on the wall that they knew what Ryan Cohen was going to do as far as America and building this Amazon competitor, and they wanted to try and stop it at all costs. So I think that that is what we've been waiting for this whole time, is that Boston Consulting Group case to drop, which is officially dropped. It was a motion to dismiss yesterday, and today is officially dropped. And then and beyond, the class action lawsuit that would open up too much liability for Ryan Cohen as far as moving forward with this, that will go to court this Friday, I think at 10 o'clock Eastern. And if anyone has read through it, it is the most frivolous lawsuit. They're doing it definitely just to stall. They literally took just, it's like they read one news article and tried to make some connection between it and then actually file a lawsuit about it. So it's definitely,
Yeah, I know the BCG one. You're right. As soon as Ryan penned that letter to Bed Bath, they filed that lawsuit against him. And then apparently about the same time as the third party release with JPM or some third party, I think June 21st is when BCG decided to drop the case, and then obviously the court hearing today. So it kind of almost alludes to the fact that they caught people with their hand in the cookie jar and literally went to BCG afterwards and said, well, we found this party guilty, and they're now signed off as a third party release, and you might want to dismiss your case. I'm just saying the evidence is probably overwhelming that anybody that was nefariously trying to go against RC or Bed Bath were literally dealt with. You know what I mean? Like, so I find it beautiful. I mean, I saw Jake's post as soon as he posted that first thing this morning. I was like, wow, that's one out of the way. And then obviously, like you said, the class actions on Friday. I imagine there won't be any difficulty with that one either. I hope it doesn't get delayed any longer. I was more or less thinking today was really crucial for the interest rates to see how long, what would happen, whether we're going to start to see a market crash now or whether it's going to be delayed a little bit. I guess the interest rates are staying the same for now. So my hope is that this gets, the claim against RC gets dropped on Friday, and then hopefully they're free to go, man. Hopefully they're free to announce and cause a little bit of disruption.
I mean, the interest rates are, I think, important for a lot of ways. One, it actually affects other companies more than GameStop because GameStop doesn't have any debt, so they don't need to pay any interest to anyone. They have a huge stack of cash. And so all the other companies that do rely on loans, they're suffering. And if there's not an exact timeline when they're going to be able to get funding, like they might have to do a merger acquisition or like be acquired, right? So GameStop is in a good position. They have a bunch of cash, and so they just acquire these companies. And I mean, they could even just use shares, right? Their share price is staying very, very steady, and so that would be even cooler. Say, something like Cost, they did buy it with shares. All that short interest would then get pulled over. Thanks, Pickles, for dinner, by the way. You're a stud. Yeah. So
just give me a quick sec, Mike. I just got to disappear for 10 seconds here while I kind of stop the dog from going ballistic here.
Yeah, no worries.
2 seconds, good. Brother.
Yeah. So another thing with the interest rates is it's interesting that you have you got good news, and then so the market just rockets up, and then what do you know? It just comes right back down. I wasn't even necessarily a lot of things I was doing, and I knew they would do that. The level of a whole market. That's right when Iran chose to say they're going to retaliate, or that Israel did. For anyone who doesn't know, right, to the north of Israel, you have Lebanon. And that's, Lebanon is a very diverse place. There's like 3 different groups in there, main kind of, you could say, so just religious groups. And, that's where Hezbollah is in the south of Lebanon. And then you have Iran, and they high-ranking people in Lebanon, on Iran, both sovereign countries, like this whole time they've been playing where they'll do things that are like the Golan. Oh shoot! I think I was lagging out. Can you still hear me? Yep. Check.
You're roboting again.
Oh dang it!
Where are you? Are you at the gym?
No, I should have gone to the gym. I just I live too. I need Starlink is what I need. Here, actually, I'll let you take over for a second. I'm gonna see if I can figure out my internet thing a little bit better.
Okay. Yeah. Hey guys. Kind of surprise show here. PP obviously had to cancel for personal reasons, so I guess when Michael gets back, we'll get into a couple posts that Bobby dropped today. I know the HBC thing, he was able to discover how many shares were potentially leveraged by HBC. So I think we do have an idea as to what the total TSO is right now. If I stand correct, we're at 792 or 793 million now for the TSO, just based on the HBC filing. However, a lot of it's redacted. Um, Obviously, a lot more to learn in that case as to what's going on with it. But I definitely do think that HBC is probably friendly on this. Bobby was also able, Bobby Cat 42 was also able to find out that 311 million shares um, were literally being held by a third party. Um, Fuck these comments in chat here. You guys are nuts. Um, I'm going to try and see if I can pull that up here. Just give me a quick second. Well, I feel like we're bombing here without PP navigating the. There you are.
I
Do you
think I
have
might
the
have fixed
ability
it.
to pull up? You think you got it fixed?
Yeah.
Do you have the ability to pull up Bobby Cat's post today? The one about HBC, he had two good posts. One where he was basically showing that a third party was holding the 311 million, and it was kind of in Carl's filings. I don't know if you saw that post. The other one was the total TSO. So it's literally showing the outstanding shares as HBC went through their process. And it brings us all the way down to April 21st, and it's showing 793 million shares as the outstanding share count now. Did you see those two posts?
No, but I have it right. I'll pull it up right now. So,
Yeah, that one right there. So if you click on that, look at how much is redacted. Unbelievable.
that's exciting.
Yeah.
That's way exciting. Oh my gosh.
So if you hop into that post and click on it, you're actually going to see if you open that up, it literally shows the documentation of HBC and the transactions and the share count increasing.
Oh wow. Total. Oh.
And if you hit the next page, you'll see the dates, you'll see the shares. And when you get down to April 21st, I think there's another page too.
No way.
Yeah.
Wait, what? Wait, how though?
What do you mean?
2 million shares?
What?
It says it said total common stock underlying derivative secure. Oh, that's derivative securities. Okay, sorry. I was looking at the wrong column. I was looking at this one, and
Okay.
it goes for like I would my yeah, that was just tripping me out. But these are the call options. Okay, so there's call options under. Oh wait, this is all about. Wait, is this all about? Yeah, so these are all the call options that are out there, right? So it says total common stock underlying derivative securities. So that's why it says over here it says common stock underlying, and oh, there's this. Oh wait, the series A. Sorry, what were you saying about this? Sorry, I haven't.
Yeah, maybe this isn't the right post. Maybe this is a different post. Maybe we'll scroll down because actually one of the posts he did. Um, so here, yeah, let's try the other post below it. There it is. There it is.
Oh wow. Here's a table showing data from the HBC BBY deal from 2/7 to 4/21 and the effect it had on the TSO. It includes cumulative underlying shares delivered by BBY to HBC, column B, approximate shares outstanding per BBY books, column D, pending Hudson Bay conversion exercise, column E, approximate shares outstanding plus pending requests.
Yeah. So if you look at column F on the, so you'll see it kind of increasing. So we were at on February 7th, 100 and whatever it is there. And then
Mm-hmm.
when you go to the next page, right before, because they signed the bankruptcy on April 21st, right? So they actually signed it on a Friday and declared bankruptcy on Sunday. So the last day was April 21st, and it's showing 700 and what's that number? 93, I think.
Yeah.
Yeah. So that looks like the final TSO that was impacted because of the HBC.
Okay. Yeah, that makes sense. I guess.
Now,
Yeah.
the question is, did those go to the street? Which I don't think they were, because in another one of Bobby's posts, you're going to see that a third party looks like possibly Carl has 311 million. And so that's another post that he made today, which was really incredible. Um, Now the question is obviously, HBC's got a claim against them right now. They're trying to deem them nefarious, suing them for $300 million. But I'm more of the state of mind that they're actually a friendly. They did it for a third party. It was a mezzanine, and so there is dilution apparently, but it's really for an owner to accumulate those shares. And so Kinky Sacks actually did a post earlier yesterday, and when I woke up, I saw that, and it kind of clicked for me in a sense that um, it looks like that third party, HBC, was literally accumulating shares for a third party. And the gist of it is, and I made a post, maybe we could bring that up later, that ultimately, obviously, it was dilution, but it looks like somebody gained a controlling interest before bankruptcy of the entire estate. And so if you do the math, um, 117 million was the original float, and then we were at 428. So when you subtract that, there's 311 million. That to me, if HBC did the 311 million shares for a third party, that would generate 73% ownership, because if the float was 428 after the 311 were done, that means somebody could have grabbed 311 million shares and gained 73% ownership. We also know that RC sold his 9.8% ownership, and we believe it's to a third party. So now you're well over 80%. And then somebody, obviously, from literally when HBC came in all the way up until the expert market, could have obviously bought a lot more shares too. So I'm kind of the speculation that a change of ownership happened well before bankruptcy.
And now that you're actually mentioning that, even though I do mistrust HBC, and it, I mean, it could be that it was already so there were so many counterfeit shares out there that they needed some amount of liquidity to it. So drowning it was the only way to do it. Because, yeah, no, I mean, I keep going back and forth, but especially seeing, how things have been, like how, like the whole 2 year delta thing with Ryan Cohen's tweets, where it seems like he knew 2 years ahead exactly what's going to happen, right? Like the next tweet on the 2 year delta is talking about inflation, and like we're right at the time when the question of quantitative easing is going to happen. And so I don't know, the level of control it seems that Ryan Cohen has makes me think that whatever happened to HBC, had to have been, Ryan Cohen was in control while that was happening.
Yeah, I tend to think, because if you look at the money trail, Michael, um, Carl did a $400 million ATM right in just after, I think it was in June or July of after Ryan apparently sold his shares. And so Carl did this ATM raise of 400 million. He used Prosper Rose, and then literally it wasn't until about November that uh, somebody financed the September, October, November. Sorry, I think there was two $400 million raisings, and it just so happens that they're using Prosper Rose. So I kind of look at the money trail and think that Carl is actually in charge of the dip, and he's the one that provided all the capital to become the secured creditor. And then whether it be HBC representing Ryan or HBC representing, now I'm starting to believe that actually HBC is representing Carl because of Bobby's other post, because and we need to pull that one up because it was really instrumental. He can literally show you the math that Carl was holding almost 370 million shares, or 300 something million shares. Let's just see if it's there. Which one is this?
Example: conversion exercise and
No,
exercise requests.
Let's just see.
Dude,
There it
man, this
is.
guy really does work, man.
Yeah, this
That
guy
is
worked hard.
impressive.
Click this one. This is a brilliant post. So Carl Icahn's last Form 4 for IEP filed right before Bed Bath & Beyond filed for bankruptcy on 4/19. So literally 2 days before they signed the bankruptcy forms. He owned 311 million units. Now, Argos BC last Form 4 for Chewy filed before Bed Bath & Beyond showed they own 328, 722, 454 shares on 4/12/2021. However, in May 2020, they entered into a forward purchase contract with 2020 Mandatory Exchangeable Trust, and in return received 535 million and pledged to deliver 17,584,098 shares back to the trust on May 16th of 2023. So this is under bankruptcy. If you do the math, and in May 2023, after they deliver those shares back, you end up with 311 million shares. So that is pretty much identical to what I believe HBC was holding in a trust for a third party. So it seems that there was this trust set up and they were pledging shares back and forth. And that's really what established the control. And timing's everything too, right? And so it almost for me identifies that Carl, in a sense, is holding the 311 million. And that's where I kind of always said that HBC is a good guy, because it literally said in their opening paragraph of that filing that HBC is doing a third party transaction. So it wasn't HBC profiting, it was literally buying on somebody else's behalf. So they made an agreement with Bed Bath & Beyond, provided the financing, and then accrued all these shares. Now, a lot of people think it hit the market, but what I think is it actually went into a trust fund. And now we're seeing that the numbers match of 311 million in this trust fund compared to what we expected to almost hit the street. And so I think that's where the smoke and mirrors will be found in the HBC case, is that they're suing HBC, but really I don't think there was anything nefarious that HBC has done whatsoever, because they were acting on behalf of a third party, and that third party's redacted. So who is it? But then when you correlate to see this trust fund of shares and the numbers work out together and the timing, it almost gives me the idea that ICANN Enterprises was behind HBC. And then
I
when you
mean,
look at the money from
yeah,
when Sixth Street showed up, there was ATM offerings by Carl. And so I almost assume that Carl was almost in charge of this whole transaction, doing the financing, securing the premise, securing the entity. Yet Ryan Cohen, and Carl wasn't listed anywhere on the documents, yet Ryan Cohen was listed as a creditor, a debtor, and all this. And that's where I think the smoke and mirrors is. And that's why I've always kind of leaned towards Carl as opposed to Ryan. Whereas, the majority of people think it is certainly Ryan. I do think Ryan will get baby 100%, but I'm more looking for two lifts. I'm looking for an ICANN lift. And then when he carves out baby to RC, you get the RC lift.
yeah.
But we'll obviously we're premature. We don't have all the details. I mean, half the stuff's redacted. But I do want to thank Bobby, because these
Yeah.
are phenomenal posts.
Yeah, no, this is amazing. And actually, looking at this right now, you can see the transaction date is 4/19. Well, that's like right when everything was sort of happening, right? Like you just look at the dilution that happened just days before that was, let's say, just a couple weeks before that, there was about 311 million shares issued. So that's pretty
That's where the
crazy.
bear trap is, because remember, what month was it? Was it March, where we did 1 billion shares traded in one day, 986 million shares traded in one day? And
Hmm.
that's where I think the fraud occurred, in terms of both the market maker selling too many shares, Seed and Co registering not enough, or having too many registered, because it's almost like everybody anticipated HBC to be selling in the market. The shorts come in, they short the shit out of it, to the point where they literally had more than almost 1 billion shares trade, yet the TSO was only half of that. So you literally had twice the volume of the outstanding shares transact in one day. Yet if you go look at the buy and sell ratio, which generally for Bed Bath & Beyond was generally anywhere from 65 to 90% buy ratio and anywhere from 35% to 15% sell ratio, well, the math doesn't math. And so that's where I think there's almost this fraudulent, they captured all the evidence with all those trades going on and then saved the 311 for the week before. So it was almost like they painted a picture, the shorts went in and did all their nasty stuff, yet they didn't put those into the market at that point in time, almost saved it right to the couple days before bankruptcy, and then moved those shares into a trust. And that's where the smoke and mirrors is happening.
And I think, just for anyone watching that might not be super familiar with this, the reason it seems so speculative, like why would you think, oh, a bankrupt company would come back and there'd be all these like super complex whatever things behind it? But there's been several things along the way. I don't know which one stood out to you, ABC. But for me, I definitely remember when the 5% shareholders got frozen, right? Bed Bath had just entered into bankruptcy, and they froze anyone that had more than 5% from being able to sell. And I remember that just really hit me. I was like, how could they possibly do that? Like, there's no way. Like, those are the people that have the most money to fight, right? Legally. And so it's like, why would they freeze them from selling? And now that I understand what net operating losses are, that makes sense. But they couldn't freeze them, like, unless somehow them staying in it would help those net operating losses. So there's lots of, I mean, I should have made a list earlier this week when I thought about it of all the things that kind of like cemented in that it couldn't be a liquidation. I mean, one, it didn't switch to a Chapter 7. It still remained a Chapter 11. And the speed of it, they would not let a bankruptcy go this fast if it wasn't a prepackaged bankruptcy. And because there'd be lawsuits. Why would they just dismiss shareholders without really a question, unless the shareholders were going to be completely taken care of, And yeah.
And all the assets. So if there was a change of control, just in terms of share count, so let's say the 311 million were held by Carl or some third party, and at that time when HBC showed up, the TSO was 117 million, well before, right before the HBC deal came into place. And so you add 311 just in terms of what HBC was going to hold for a third party. So that brings you up to 428. Then obviously they got to make money in order to pay down the ABL, right? And so that was really, I believe, what the primary goal of HBC was, is to pay off the ABL so that the liens come off. So that way, JPM obviously tried to block an leverage buyout in January. So February, HBC shows up, gives a shitload of money to the company, acts as a third part or represents a third party, puts these shares into a trust fund so that now somebody owns 73% control of the company, plus maybe RC's 9.8, which sold to it. So over 80% control of the company right then and there. Yet they haven't been put into the street yet. The shorts believe it has, because HBC is going to make money of this. But when they were dropping their floor price, that was kind of a bullish factor. It's like, well, if these guys were after the money, one, why didn't they take an instant 15% profit? Why did they continue to lower the floor price? And the third issue was some preferred warrants were actually cashed in. I think 7,100 preferred warrants were cashed in to pay down a debt note that was due in March. And so why would HBC show up to do all this on behalf of an estate if they were just simply there to milk it and short it and profiteer? One, they wouldn't have helped pay down a debt note. Two, they wouldn't have lowered their floor prices. And three, the agreement said it was for a third party. Yet the shorts and the narrative, the death spiral, even Michael Blurry tweeted, oh shit, death spiral coming. All the mainstream media, dilution. Reverse split was talked about. HBC shows up, the B. Riley ATM offerings, all this painted dilution. And literally shorts just went crazy on the stock, hammering it down all the way down to 7 cents at one point in time. Yet those shares never hit the market. And I believe that's where not only the bear trap was, but the garnering and collecting of the evidence to show that there was obviously fraud here because they were using synthetic shares because these shares had never hit the market. And then right before bankruptcy, you see that transition into a trust fund of the 311 million held by that third party. That to me shows that there was smoke and mirrors here, in my opinion.
Yeah, and I keep going back and forth because, I mean, for me, my theory against HBC was that they pre-sold the shares and they were just trying to cover their position and also ensure that the company went bankrupt so that all those, billions of synthetic shares didn't get caught. But something recently actually made me think maybe HBC is okay. Maybe they're part of this, and that was actually I noticed someone attacking. I won't mention they were on X, Axos Bank, AXOS or whatever, or no AX. It's just AX is the ticker, and I was like, well, that's kind of interesting. And as I started, I was like, I don't know anything about this ticker, and so as I looked it up, I actually saw that there was an interview with on YouTube with Market Rebellion, and they were just saying, "Oh, Hindenburg is shorting Axos." They just wrote this huge Hindenburg report, and then they said our close friends at Citron Research are also shorting it, and I was like, "Oh man, that's like crazy," because like right before he gets thrown in jail, they have these other people say like, oh, our close friends we short the same stocks as them, and we also have like social media that we're trying to do certain like pump and dump things with. And so I went back and this person on X that mentioned this, said bad things about Axos. I went all the way back into their search history to find the first time they referenced it, and it was all the way back in 2018, and it was in the context of Elon Musk. And it made me think, like, when was it that Elon Musk was like, hey, I want to do kind of like the, is it WeChat in China, where it just like has everything in that app. It's a messaging app, but it's also just everything. I think it was that far back that he said that he wanted to do an application like that. And so I think that this was all building ever since then. And it's like kind of interesting, this coordinated attack ever since, probably even before 2018.
Well,
To
when you
stop it.
think about it, IEP's been around for 32 or 33 years, right? I think what 1986. I'm not sure the exact date, but I do know Jeffries helped set up their bond indentures for Carl when he launched IEP. So 32 years, this guy's been turning profits. In fact, in 2022, he actually provided a return of 14% for his investors, which beat out Warren Buffett, who had a return of 11.8 for that year. So here's a guy that's turning profits for his investors, doing extremely well, and then soon as Bed Bath & Beyond hits bankruptcy, and actually before that, I'm going to bring you back to, so in January, I think there was a leveraged buyout offer, okay, where January 13th, I believe that they had a leveraged buyout offer on the table. They went to the FTC and the SEC and said, this is a merger that we're going to do. The FTC and the SEC has 30 days to reply to your application. February 14th, RC tweets, stop shooting down my balloons. To me, that's an indication that some governmental regulator has put an issue in front of them. Stop shooting down my balloons. And then the crazy thing is that obviously they had to apply to the SEC and tell them what the merger was. Well, the crazy thing was 2 weeks later, after that tweet, about March 1st, somewhere around there, Citadel shows up and invests into Newell and buys stock. So that told me that there was a leak of some sort, because the big boy is now buying shares in Newell. And then 2 weeks later, Brad Icahn has to sell 50% of his shares and step down from the board. And Carl Icahn was to step down from the board. And then 3 other guys from Dragonfly, Blake, RC, and Larry, all stepped down. So leverage buyout, FTC, SEC comes back February 13th, 1 month later, and says, this is what you got to do if you want this merger to happen. I want 5 guys to resign. I want you to sell your shares. Otherwise, we're not going to permit this. So what happens is exactly 30 days, well, 2 weeks later, Citadel shows up and buys a stake in the Newell, which told me there might be a leak of some sort because it was sent to the regulators. And so why would he suddenly show up buying stock in Newell, right? Because I've always believed that Newell's part of this big merger. Only reason because the 2% HSR rule, but I won't get into that. I don't want to deviate. And so then exactly 30 days after that, those 5 guys resign, and which was 2 weeks after Citizen bought in, but then JPM blocked it. So what I'm thinking is that HBC showed up in February and they knew they were going to get blocked because of the liens. Okay, let's gain control of the shares. Let's get 80% or higher ownership of this company without anybody even knowing. While they think it's dilution, that they're a bad guy here, we're actually going to gain complete control, get a change of control in the background with the share account. And in doing so, now you're in charge. You own all the shares. It's not your problem if the market maker oversold. It's not your problem if Seed & Co. misrepresented stuff. It's not your problem if other people are using synthetic shares for locates. That will all come out in the wash at the end. Gain control. Now take the proceeds from HBC and pay down the ABL. Get them paid off. Show up in court. And now you're under court protection where you can literally consummate the transaction that was blocked. And that's really where I think this has kind of happened, is that all these assets and all these things that they wanted to keep, whether it be Bye Bye Baby and a couple other going concerns, through a reorg 368, everything was put into a trust, so to speak. And now they needed bankruptcy to get that protection over them. So it's been a wild ride, man.
And I think there are a lot of people that have seen this coming a long way off, right? I mean, when Ryan Cohen tweeted about inflation, since the time he tweeted till now, there's been like 30% inflation. So, he wasn't wrong. I mean, who would have thought that? I mean, the huge packages, like aid packages and everything, like, I mean, the money printer was just going burr for like a long time. And that's even after like all the COVID money printing. And so, to see like even relatively when they would stop, printing money, yeah,
it's been on a bull market, Mike, for what, 7-8 months now. The stock market, the Magnificent Seven, have been leading the way with Nvidia and Microsoft and all these Magnificent Seven. We've literally been in a bull market. Yet look at the macroeconomics of war with Ukraine and Russia, the deficit, everything has been almost, I'm going to say, falsified, where it's almost being manipulated to the point where the majority of people out there are going, it just doesn't, the fundamentals don't make sense. Why we're in a bull market, yet the macroeconomics say we're on the brink of World War III, inflation's out of control, the employment numbers aren't making sense. Everything almost seems to be fundamentally screwed up, so to speak. And so the printers are going burr, the stock market's taken off. The only thing I can kind of gather from all this manipulative bull market that we've seen for 7 months is they need liquidity. They need cash in order to pay for the mess they made. And I think that's really where we're at the tipping point now. I was expecting hopefully a rate decrease, which would have caused a market crash today. It looks like they're going to hold on, but I believe September, there probably will be a market reduction. And what I think, interest reduction, and what that'll mean is that the market will start to crash, but I think it's almost they're on their last legs of trying to grab liquidity right now. Grab as much cash as they can because they know what's coming after.
And I think you're right. It's a fake bull market, because if you have 40% inflation over the last 3 years, and the stock market goes up 40%, it didn't like it didn't actually go up. It stayed flat, right? And I think it was a time where they were trying to get cash because they had gotten too leveraged, like not on accident, on purpose, and then they had to delever it by taking money from all the responsible people, right? Like I have a good friend, finance degree, everything, very intelligent. He saw the writing on the wall and he pulled all his money out of the stock market. And just like yesterday, he's like, what do you think about buying the Qs? And I was like, no. I mean, maybe some call options, just take a small portion of your money and just like, whichever direction you think it's going to go. But I was like, I would not be. And so it's like finally like it's like the feds have finally convinced everyone it's a real bull market just when they're going to like drop the bottom out and hand over the bags to all the people that have been working hard the whole time. And so it's just like it's a broken system that can't keep working. And there's so many things about the system that are broken. And it seems like that there's so many people that all feel passionate about these different parts that are messed up and they're doing something. And one of those is the Fed. And we're seeing that spread. Argentina, El Salvador, I guess Peru is also potentially next on this, like, fighting the Fed. And who knows, Venezuela, if they can kind of turn things. But the other thing is that how the model of business, right? All these brands that have put a lot of time into building a brand that they can stand, that can like guarantee, they're getting put out by Amazon Basics, right? Amazon Basics will leverage whatever country currently, is desperate, and they can anyway, like they're exploiting countries one at a time. They'll just move as soon as it's not convenient anymore. But all these brands that have been, working hard to create good products, like they're mad, right? And so, the whole model of Amazon isn't sustainable. I mean, they're not even making money selling stuff. So they're screwing over their vendors. They're also, not profitable. So it's going to end eventually. And like their model is that they rent space. Well, eventually there's not going to be people that have stuff they just want to put in there, because whether it sells or not, they're paying that rent. So let's say that the market does come down and people tighten up a little bit. People already are pretty maxed out on their credit cards and stuff. And so say all those sales kind of start going down. Well, now all these people have all their crap in Amazon warehouses and they're paying for it and it's not moving. And it's crap that no one knows what even it is, because the only way they're getting it in front of people is to pay that premium to have it be the promoted item. So now they're paying rent, they're not moving items, yet they're still having to pay so that people see it, and they're just going to run out of money. And that's going to break Amazon. And so there's been people, I'm sure, that have seen this coming since the inception of Amazon, and all these brands have got together. I mean, that's why we're seeing such crazy like signaling of, that they're part of this. I mean, some of the stuff we've seen from Lego, I mean, even Roku, and basically any company that has founders rather than just overpaid executives seems to be very like doing very tinfoily suggestions that they're part of this.
Yeah, I think the days are over for Amazon. I mean, obviously, just look at who's selling all the shares right now. I mean, Jeff is literally cashing out in the billions right now, and that's usually indicative of what's coming around the corner. They obviously have the inside scoop of where the balance sheet sits, what, the forecasts say. And so even when he launched Amazon, he said, expect this company to die one day. So I almost believe that this was a psyops, and obviously it made money along the way, but now it makes no money in the retail sector. It makes all of its money on the data side of things. It's just not a sustainable business model anymore. And especially if a competitor comes along and is very customer centric with a synergy in shared expenses. And what I mean by that is because this is a big thing that Bed Bath & Beyond learned, is that they were in bed with Evergreen and shipping companies and all these third-party services. Even you were able to find out that their e-commerce provider was not making them any money, right? Just based on the service fees and transactions and everything. And so when you put all your eggs in other people's baskets, they control the outcome on your behalf. And so what I see now is happening is that the activist investors have partnered with people like Flexport, Shopify, but they just haven't partnered with them. They brought them into the fold and said, we're going to share revenues with you, and you're going to share revenues with us. And we're going to create this relational leveraging. And that's really the new business model. And the best way to explain it is Airbnb leverages your apartment. Uber leverages your car. So they create a relationship with you, but they leverage your product and your service, which is your car. Well, in this situation, what you do is you grab a shipping company like Flexport. You grab a e-commerce company like Shopify that's got the logistics in the back end. You partner up with other product verticals. But what you do is you don't just partner with them and say, hey, I'm going to sign a contract with you, because if they fail to deliver, your business is impacted. So you make them have a monetary stake in the business and a recipe for remuneration too, so that as you grow, they grow, and everybody gets into a win-win. And so this relational leveraging is really kind of the business model of the future. And I think that's really where Amazon failed, is that they were kind of the pyramid of it. They were the ones that were setting the algos for their search engines. No good brands could really move to the top. If they found that you were doing exceptional sales, what they do is they go out and either short attack your company, seller box you, and then buy you for pennies on the dollar, or they go to a third party and create a competing product and move it into the search algo as opposed to yours. So they were literally the pyramid of the business model, whereas this is actually kind of a reverse triangle. All the companies up top, which filters down into a holding company underneath. And that's really the better business model, because if you're sharing in expenses, you're sharing in resources, you're sharing in the data, you're sharing in the distribution, you're sharing in the customer mailing list, and your expenses drop because no longer, if you own a business, Mike, and you have to build your own data center, you have to build your own shipping, you have to build this, you don't have the profit margins to survive in a very competitive market. But if you bring in companies and you say, hey, I'm going to invest in your company, you invest in mine, and now Flexport is providing shipping services not for just the one company it's partnered with, but let's say 200 companies, he's going to charge lesser of a rate because now he's got 200 times the volume. And that's really the business model that I think we're about to see. You're smiling. Somebody's making some smart ass comments in chat. I can't hear you.
Oh, Crayon Green gifted some memberships. Thank you, Crayon Green. You're the best.
Nice.
I like the way you're mentioning that, because that is, we're looking at a synergistic model as opposed to the reason that Blue Yonder, which was the e-commerce solution, was such a failure, is that basically they had created a system where everyone just does their small role and they all have to stay together, right? Let's say that Lego is like, hey, I want to work with you guys. We're going to do some stores. We'll do some cool displays in each GameStop store, and maybe we'll make like, I don't even know, some kind of print your own Legos, or I don't know, something crazy, or VR where you can like, make a Lego kit, a custom Lego kit, with your friends or like on a date. And then like you make it in VR, you build it in VR, and then it gets shipped to your house, and then you can literally build it in person. Right. So, I mean, let's say that they do that. And then let's say that the relationship sours. Lego's going to be fine. GameStop's going to be fine. Right. They have the potential for synergy, but whereas the way that the system was set up, like it was like, no, you use Blue Yonder, and if you don't play by the rules, we'll screw you over, right? Because other companies Blue Yonder was with during COVID did fine with shipping. It just so happened that that Bed Bath and Beyond didn't, and there's reasons behind that, because Blue Yonder, what do you know, is part of BCG. I mean, that's like their, one of their darlings. So it's a whole change in model, and it's about time, because even Amazon has this kind of threatening model where it's like, look, you either play our game, like companies gear up to be able to sell, and they can put the volume out through Amazon, and so if Amazon pulls out, they're screwed. So they have to negotiate, and Amazon knows that. So Amazon will let them get big enough, scale big enough, and then just threaten to rug pull them, because they would go bankrupt, right? You can't just immediately scale down, but you can immediately just not promote someone, right?
And what if all these bankrupted companies that have been seller boxed into the ground never go bankrupt and actually reemerge? with Knowles, with the short interest. They preserve the QSIP. Well, what ends up happening is now the irony is that one side literally attacked and shorted and seller boxed all these companies that weren't playing by their rules. So they kind of, said, oh yeah, you're not going to swing our way. We're going to certainly attack you and seller box you and drive you down to the point where you're bankrupt. And we won't even have to pay taxes on our profits because you're seller boxed. We'll just let you sit there in OTC or the expert market till infinity at 0.001 cents a share. Well, the irony is their mandate was to bankrupt all the companies that didn't want to play ball with them. And the irony is that all these companies, if they reemerge with the Knowles, the short interest, the QSIPs, now what's going to end up happening is they are going to be able to get the funding necessary through the short interest and the Knowles to become even stronger. But the real difference is they have millions of investors, retail investors. They have millions of retail shoppers behind these stocks that they invested in. And so you won't even have to spend any money advertising, because just the idea of Sears coming back, or Blockbuster coming back, or Bed Bath & Beyond, or Bye Bye Baby, you're literally going to have millions upon millions of faithful, loyal customers that will not only open up their wallet to invest in your company, which obviously lines the profits of the company, which shows an increase in price, but you're literally got the perfect business model, because you don't have to go and advertise on Google or do Main Street marketing or advertising, because you've already got the base of people. It's not like you're starting a business from brand new. What you're doing is taking the loyalty of all these seller box company, resurrecting them, and creating a better business model so that everybody wins, so that they have less expenses. To me, it's brilliant. To me, it's the business model of the future.
And a lot of people might think, because I've tried to explain this to a lot of people, like, why would they go through that effort? Why would, the government and regulators, why would they be okay with so many hedge funds getting liquidated and this weird transfer of wealth to these like random people that are buying bankrupt stocks, right? But in the context, I was actually talking to Tendi Loving Shares, and she's going to go talk to one of her state representatives, and that really made me think, because these states, right? You have Elon Musk pulled out of California. I can't remember which other company he just pulled out, and it probably cost him a ton of money to do it. But California has somewhat of a spending problem, and some other problems as well. I mean, I'm from Northern California, so I know. But he pulled out, right? And now all of a sudden, the state's like, crap. We're not pulling in the revenue of from taxes and whatnot, and from everything else. And I didn't realize, like, when you look at like the budget, like that money has to come from somewhere, and there's like a lot of towns that they don't have anything going on, so they have just cops sitting out there tagging anyone that's from out of state just to get that revenue, right? I mean, I've gotten more tickets in Nevada like than I could shake a stick at. But so you think about, in the context of the most powerful person to actually take on Wall Street, to take on these hedge funds, is actually the state attorney generals, right? And just the state senators, and because why the reason they would want to is because slowly they're going to see all their retail companies being bankrupted. They're going to see their constituents lose their job as these brick and mortar companies, just one by one, just go out of business. And so now the company is not paying taxes. The people working there aren't paying taxes. In fact, now they might need some Social Security help. And the short hedge funds that were profiting from the downfall of it, they're not paying taxes, because they don't have to pay taxes until they cover their borrowed share that they borrowed and sold, right? So the thing is like, no one's paying taxes. It goes from like everyone paying taxes to no one paying taxes, which actually reminds me of another thing I was going to say a little bit earlier. So another phenomenon I think we've been seeing in the stock market is that makes it look more like a bull market, is the fact that if you're really rich, and okay, bet mentioned this. Uh, he says that you can get a loan with the and collateraled by your shares, right? And so, you get a big stock portfolio and then you loan against it, and that loan has better tax advantages. And so the thing is that there's a lot of companies, a lot of these executives, let's just say NVIDIA, for example, their CEO, he probably he had tons of shares, and I'm sure he had a lot of loans against those. And the interest rates, when the interest rates were 0%, well, if your loans or if your stocks are going up and your interest rates are like 0 or 1%, you're making money. I mean, if inflation is 3% and you got a 1% loan, which those rich people were definitely able to do, then like you're making even more money and not paying taxes, right? So now the interest rates are high and you'd have to pay like a 5.25% loan. Well, now suddenly you're not as willing to just like use all your shares and as collateral and get these big loans. So that means that they're going to have to start selling their shares, because as much as the feds are saying, "Oh, we're going to cut rates," they know they can't. They just want to convince us and just kind of pull us along time after time. I don't know. I mean, if they do, it's bad news that they do, right? Like they'll do it for the wrong reasons. Or like, why? Like bad news is good news. Like, oh, we might reduce rates because now there's more unemployment, and it's like, yeah, but like, lowering the rates doesn't automatically create jobs and fix everything. There's definitely lag effects that happen. So, I think we're going to see that the the interest rates stay high, and big CEOs. I mean, the CEO of NVIDIA has dumped a lot of shares over the last month. I mean, like it was crazy when he first started dumping it. It was at like 140. It then peaked for some reason. I don't know why. For some stocks, it's bullish that their CEO sells a ton of stock.
Well,
And
we're in the there's usually a double peak, right? Especially in a melt up. And so basically we've seen this bull run for 6, 7 months. And then Nvidia hit an all-time high, one of the biggest market caps ever of all companies out there. Then we see the drop, and then we saw today that they're not going to lower interest rates possibly until September. So we're going to get a little bit more of a bull market here, just for another week to 3 weeks type of thing. And this is, to me, is just another liquidity grab. But come September, they're going to be forced to do something. And that's really where they've been kicking the can, keeping the interest rates the same, because you don't want treasury bonds to be sold off, and nor do you want the market to crash. And so you're kind of in this pickle where you got to keep the interest rates the same. But now the effect of the macroeconomic situation means you got to act one way or the other. And I believe that September is really kind of the true calling. So what I'm seeing right now is just this little double peak. We're going to see another 2 to 3 weeks of kind of this bullish market. And then after that, to me, I think it's pretty much game over, and true prices will be reflected across the board. And at that point in time, you've got CEOs like Ryan Cohen, who have $4 billion tucked away. So that when the market does crash and all these companies that are over leveraged with high interest rates, that are locked into terms that they can't afford, and then the market crashes, there's going to be a lot more companies filing for bankruptcy. Well, if your business model is to go in and restructure those businesses, give them the financing, and then invite them into a new business model that synergistically creates a win-win, now you get to pick them up for pennies on the dollar, restructure them, clean their balance sheet, and bring forth the nulls and the short interest. Game over.
yeah, no, it's going to be a whole change. The whole system. I mean, it has to change. How it's, and I do think there's going to be a pullback. I don't know what it's going to look like. It literally could go a lot of ways. I mean, it is going to decrease people's margin if it does go down, though. All these people that are shorting. I was just talking with someone from the MMTLP community. We actually filmed a video. I'm editing it, and I'll be releasing it later. About the tokenized shares that hit the market, and all the ways that they can try to get margin to keep shorting, right? Because but we've seen all these things like cryptocurrency not being able to use as margin, right? That was a big thing. And then once we,
Repo, the
yeah,
repo facility was dropped too, where you can no longer use that repo facility. I think it still exists. Up here in Canada, believe it or not, the reverse is happening. So, overnight repo facility up here in Canada used to be $1 billion for the institutions where you could borrow $1 billion overnight.
mm,
It's now they've been doing $16 billion a night, the institutions up here, 16 times the normal course of action up here. So the institutions are going to the government's turning on the printer, loaning out 68 to 16 billion dollars a night for these institutions out here. Whereas in the US, they stopped the crypto where you couldn't leverage that. They kind of reduced the repo facility so you couldn't do that. There's a capital gains tax on the table for October. So, and then you start seeing, Citron and other things like this. To me, I believe the U.S., obviously, which is ahead of the Canada, is on this trajectory where they almost want a market crash in order to grab more liquidity as they short things on the way down too. So it's kind of a win by grabbing the liquidity on the way up and then the short on the way down. So it's kind of a double win. But up here in Canada, things are a mess because I forget how many of the institutions up here in Canada, TD, Bank of Montreal, CIBC, there's quite a few institutions that are over leveraged. I think the Bank of Montreal was 14th on all the institutions in North America. They were seeing it number 14 being over leveraged. But I'm telling you, it's a mess. There's quadrillions of dollars in the derivatives and swaps market, well over leveraged. They know it's coming. They've been kicking the can for a decade. A better system's here, a better stock market's here. And now the activist investors have caught them with all the evidence too. It's not just, we're moving to a better system. No, we've caught you. There's fraud. We're going to hold you accountable. And at the same time, we're moving to a better system. And so that's where I really think this is the tipping point for naked short selling, because countries around the world are saying no more. No
yeah.
more are we going to allow naked short selling. I do believe it's going to start to hit the United States very, very soon, where it's going to become illegal too. Right now, everybody's kind of got a blind eye or doesn't listen to the complaints about it. But once this thing crashes in the market, there's going to be a lot of questions asked. And through that discovery process, people are going to realize how this happened and why it happened, and it'll never happen again.
And it's going to be tricky as it crashes and as it affects people's margin, because the basically I like Archegos. What happened was he had shares, and then he had agreements with 5 different banks, but he was using the same shares as collateral, right? And these swap agreements, they didn't check, right? And so one thing, like you were saying, that they want to be able to buy these, like all the people that are short, they want to be able to buy at a lower price, and so they're hoping that even when it crashes, even though their margin that they have, it will be going down because all their shares will be worth less. Well, now the price at which they have to buy back these shares, hopefully for them, will be less. But I think the problem is that because the way I think that they're doing it is, if you want to locate, let's say that whatever company you are, if you're Virtu or whatever, you want to locate, and I'm Goldman Sachs, well, I would be the custodian of the shares, and then I would make a repurchase agreement with you. It would be like 2 years, 2 years long. So you could use that repurchase agreement as locates for a short. But let's say we make that agreement, who even knows or cares whether I then the next day sell all those shares, right? So then they don't exist. I sell them to someone else. I sell them to PP, and then PP makes repurchase agreements with other people, right? So I think that what happened was, because all they need for a transaction is that static friction, right? Overcoming static friction is the hard part. Once you've overcome static friction, it's easy to keep something moving. Well, they just need to get the transaction to go through. I need to be able to borrow the shares. And so someone, there's probably just this bag of shares that gets passed around, and each time it gets passed around, it all these new repurchase agreements pop up, but they're all collateralized by the same shares. And so even when the stock market goes down, the reason that they can sell those shares is because they say, okay, well, I have to keep a certain amount of margin for those shares I now don't have. And so now their margin starts getting smaller and smaller, and pretty soon it's like, okay, well, I have $1 billion worth of shares I owe, and now my margin is less than $1 billion. So they're forced to to sell off assets in order to buy those back, and that's what's going to cause this plummet. Is when you look at all the different companies in the alternative trading system, and, Equilend, all these different things, that's where they're passing all the a lot of these swaps and everything through, and there's no tracking. The SEC is not even watching it. It's so the amount of exposure, it's just gonna have a cascading, really bad effect as they try to cover these shares that don't exist.
Yeah, I mean, and then there's the other side too, right? You obviously got the can kicking, the fact that they're not using real shares for locates. The market makers are issuing too many shares, and so the supply demand ratio is totally out of whack, right? I mean, if you only have an outstanding float of 400 million, yet you're selling 600 or 800 million shares, that really screws up the supply demand thing, which obviously affects the true value of that stock. And so you got this building on one side, and then you got the aware side, the activist side saying, well, we know how they're doing it. We know they're kicking the can. So what if we do some share offerings? And a bunch of companies decide to do an ATM, and they decide to list these ATMs publicly, give the impression that they're going to be sold through the street. Therefore, the market makers assume that, okay, well, there's more shares in the market, more dilution, so therefore I can kick the can even further and do what I could traditionally do. But if those are sold individually to a private party, that dilution did happen, but they never hit the street. And so the market makers, just like the bonds, MJL was one of the first to come around, and Spidey saying, guys, the bonds are way oversold here. And that's why I believe there's a third-party release for BNY Mellon, because they were oversold. I believe there's another third-party release for another institution out there. And so now you've got this huge mess, and the other side realizing how they're doing it, why they're or how they're circumventing things. And so the mess gets deeper and deeper and deeper because this side's totally aware of what's going on. So in a sense, they cast smoke and mirrors. And because these guys are being so greedy and not having to pay tax and do this and kick the can, that they just jump on it without thinking. Oh my God, maybe I'm being set up. Maybe this is a RICO. Maybe this is a sting operation. But there's none of that. And that's really where I do believe that GME has been working with the SEC for many years. I believe that Bed Bath & Beyond has been working with the SEC on this. I believe that really there's a huge sting operation. And now we see Mr. Left being charged. And again, it's still small, 20 million compared to the 20 million he profited, but that's the tipping point. Wait till there's a full discovery and the market crashes and everybody's focused on why the hell did this happen. Once they discover who was doing what and how they were doing it, I guarantee this will never happen again. And even if some people try and do it again, there's too many tracking systems. I think Japan, or where is it, South Korea right now, has created an artificial intelligence program that can literally pick up naked shorting within hours. And so countries around the world are developing proprietary programs in artificial intelligence because they're aware of the program, because it's affecting their country, it's affecting their stocks, it's affecting their economies, all because a bunch of select greedy people have been literally seller boxing and destroying and shorting companies. And now it's to the point where there's enough of the mass market that said enough's enough. And what I do believe is that a bunch, not just Ryan, but a bunch of activist investors have put hundreds of billions of dollars on the table to stop this.
No, I agree. And I think a lot of people might have a hard time imagining how big of a problem this is, because they're like, oh, who cares if people, something happened to Bed Bath & Beyond or whatever. but I mean, this was, you see every decade or so, you see the financial crime of the decade, and in 2008, right, it was mortgage-backed securities. People had no idea how leveraged the market was on really really bad, you know, and it's all, they find some loophole, right? These real they have all sell all these really bad loans, and then the whole thing was all around insurance, because insurance didn't have the same sort of taxes and everything as securities did. So it was easier and more lucrative to just sell insurance than it was to actually trade securities. And so now we have the same problem. And the reason I think that hasn't been addressed as much is because one of the main parts of the problem, in my opinion, is J.P. Morgan has something, is only one of two institutions that has the ability to do an alternative display facility, which, in my opinion, is what's making all of this possible. Because the alternative display facility basically can display prices and match counterparties, but it doesn't settle trades. It just matches them, you know? And so they're not technically doing anything illegal. And then so all these small companies, there's tons of them that have alternative trading. They're part of, they're authorized to do alternative trading systems. And like each one, it can risk getting in trouble. Like, oh, I accidentally did this. Oh, I accidentally, and there's all of them, and so it's kind of like, I guess looting, where it's like there's so many people doing bad things. It's like the police don't even know who to grab first. It's like, and I think that's what the alternative trading systems network is, but that's all enabled by J.P. Morgan and one other company that can do the alternative display facility. And so that's where the change kind of has to come, is that has to be addressed. And it's also not a coincidence that J.P. Morgan's been involved with Bed Bath in their share buybacks, $12 billion of share buybacks, and anyway, it's a big problem. But luckily, I think the technology exists, and I think the incentive to actually take it on, because I think states realize that they don't have as much power as they thought they did, and they actually have to raise money, and all the money that potentially could be going to them to use to make their state or their city better is going to these hedge funds and to JP Morgan, who are literally just tearing it all down.
Yeah, I mean, I do believe that JPM is actually flipped. I do believe that they're actually moving to the light side now. But again, I could be wrong. There's a couple of key indicators that I've seen Jamie Dimon talk about over the past couple of years that kind of shows me that he's moving to the other side. Obviously a bank of that magnitude is too big to fail, but I won't get into that or the politics of such. I'd love to pull up the post by Kinky Sex, I think it was today. He was talking about son of a gun, what was it? Slip of the mind here.
I'll pull it up.
Yeah. Should be one of his most recent.
Sloppy.
What?
Sloppy is getting sloppy. All right. Let's see. When was it?
Yeah, right above Mark Cuban there, the little GIF. See that one right there where he's talking about if a change.
Yeah.
Yeah, so we were kind of talking about that TSO. I did a little bit of math and said, but I think there was one more, maybe before or after. I'm not sure. What's that one?
Determination of fair market value in certain cases.
Let's click on that. See what.
If 80% or
Oh,
more
yes.
in value of the stock of a corporation is acquired in one transaction, or in a series of related transactions during any 12-month period for purposes of determining the net unrealized built-in loss, the fair market value of the assets of such corporation shall not exceed the grossed up amount paid for such stock, properly adjusted for indebtedness of the corporation and other relevant items.
Basically, if I understand correctly, if there's one transaction where you acquire up to 80% or you get a change of control, because I remember Jake talking about this, is that there can't be two changes of control. Otherwise, you're going to lose the null benefit, right? Because the null benefit only applies to the first change of control. If there's a new change of control thereafter, that would eliminate the benefit of the nulls. But if you can acquire a company, and this is where I think the HBC deal applies, because HBC was allowed to own up to 9.9%. RC was allowed and to own up to 9.8%. And then if they were acting on behalf of a third party, which acquired 311 million shares, and the total TSO at that point in time, before they did more to pay down the ABL, if it brought you over 80%, in a sense, that one transaction would preserve the nulls. And so long as it's done, I think the wording has to do with the tax year. I almost wish Kinky Sex would hop on here and explain it.
I did just send him a link if in his DMs.
Yeah, try. Anyways, in a sense, what it does is I believe that you're able to preserve the nulls benefit if the transaction is a certain size, and so long as it doesn't bypass the tax calendar year or the end date, you can use them for the next year with that new change of control. I'm not explaining this very well, and I'm certainly not an accountant, so I don't want to mislead anybody.
But I mean just the fact that this is a rule, right? And that's how financial engineering, for good or for bad, is used. Is there are very specific rules like this, and so what are the odds that Bed Bath has an 80% dilution, and that this is a rule that in this situation would be very valuable to Ryan Cohen? That seems quite coincidental.
Yeah, and that's really where I think HBC has kind of been that saving grace that literally showed up. Remember, Jake was talking about in a space caller on the stream one time how I forget the lawyer who was basically asking JPM, just give us another 24 hours, just give us another 24 hours before you pull the plug. Like telling you, we'll get some money in here come Monday morning. And on that weekend where the lawyer was pleading with JPM said, okay. And then HBC showed up that next day with $1 billion in financing, where they basically paid the estate of Bed Bath & Beyond in return for this offering, so to speak. And so if it was on behalf of a third party, really a third party comes along, gives HBC the money and says, here, put this towards the estate. Meanwhile, in exchange, I'll take a shitload of shares on the side, which will give me a change of control. And if it's 80% and it's done in one transaction, so to speak, even though it's a change of control, I get to preserve the nulls so long as I don't bypass the tax year. And that's why I almost feel that the tax year was changed, because it used to be February 28th. But the final decrees are now sitting for December 31st of each year. December 31st, 2024 and December 31st, 2026. So I almost feel like the tax years were changed in order to circumvent and leverage this rule here. But I don't want to get too thick into it because I don't want to misspeak or misrepresent here. I'm certainly not an accountant. I'd more appreciate if,
Well, Kiki's actually here.
So is it?
Yeah, I just pulled him in.
What's
up, man?
Go to the... Close this out and go down farther down the profile. There's a post. Keep where the one I quote here. That one.
This one? Okay.
Yeah, that one. Start with that one.
On September 14th, 2023, the bankruptcy court entered its order, the confirmation order, confirming the second amended joint Chapter 11 plan of Bed Bath & Beyond Inc. and its debtor affiliates. the confirmed plan.
Yeah, that's all you need to say. Just the debtor affiliates is what I was trying to show in that.
Oh, okay.
With the company, and then go down below it.
On a different post.
Yeah, I have like replies to it.
Oh, okay.
And then let's see what I say.
Oh.
Okay, this one's the most important one. This is the definition of an affiliate in a bankruptcy.
Okay. Generally, an affiliate is an entity that is related to another legal entity. The specific relationship between entities that are affiliates may differ based on the industry, legal requirements, type of transaction, or definition in a particular contract. In the context of bankruptcy, an entity owing or controlling the debtor that is owned by the debtor, or that is owned by an entity owing or controlling the debtor. Ownership or control is determined by ownership of, control of, or the power to vote 20% or more of the debtor's outstanding voting shares. It excludes entities holding securities in a fiduciary or agency capacity, or solely to secure debt. An affiliate is also an entity whose business, or substantially all of whose property, is operated under a lease or operating agreement by a debtor or an entity that operates the business, or substantially all of the property of the debtor under a lease or operating agreement. So what do you want to highlight there?
Well, it says entity owning, not owing. Owning or controlling the debtor.
So if there was a change of control through the HBC arrangement, and we know that some of the shares, I think, in the HBC deal were non-voting. I think the 311 million were voting. Basically, what it does is it kind of gives you control, eliminates the ability of other equity owners to vote on a situation. And then when you tie in that tax situation, it kind of preserves the nulls. And I'm being very skirtish around this because I don't think I've nailed it, but maybe Kinky Sex, you can add to that.
Well, I just keep going down the post. I keep going. This is just explain. The highlighted part is explaining what an agency capacity and the stuff that's excluded.
If they're acting in an agency capacity, they're matching buyers with sellers and earning a commission. Affiliate is not operating in a fiduciary capacity. Fiduciary capacity is a position of trust and power where a person acts on behalf of another in matters involving money or property, implies a responsibility to act in good faith and put the other party's interest first. Some examples of people who may act in a fiduciary capacity include attorneys, brokers, guardians, trustees, executors, administrators, and investment advisors. Entity is not holding securities to secure debt. Oh, right.
So they're none of those three.
Yeah.
And then, so I added some more context below right there. Because the change in control had to have happened. Like, look at all the stuff that you see. You see the lawyer in a deposition saying that Sue Gov was the figurehead allowed to, hold her title while she observed others fix the problems that her and her predecessor, it's in one of the screenshots. I showed that.
Okay, so this is actually funny. I haven't read this one. The problem she and her predecessor created, that Gov has been utterly divorced from Bed Bath & Beyond's restructuring, is apparent from her statements days before the bankruptcy filing. Yes, and that was annoying because that's why I bought in. Although I guess good fortune in the end. But her understanding days before the bankruptcy filing, explaining her understanding that rather than liquidating, the company would continue to reduce to a Target Street store fleet of 360 Bed Bath & Beyond stores and 120 Bye Bye Baby stores. In the April 24th, 2023 interview, which we were just looking at the icon thing and the other thing that were like April 21st. So that's kind of interesting. I was like right before her interview. So that'd make sense. That she wouldn't be on the same plan is because it kind of something substantially changed about it, like literally 3 days before her interview. The actual restructuring plan, of which Gov was apparently unaware, called instead for Bed Bath to engage in a wind down process for all of its assets, including the liquidation of inventory in all retail stores and distribution centers. Etland declaration. There will be no reorganized operations if the company emerges from bankruptcy, as Gov publicly and incorrectly claimed days before the bankruptcy petition was filed. The actual restructuring plan, of which Gov was apparently unaware, called instead for Bed Bath to engage in wind down processes. Okay. Well, it's also interesting that they call it Bed Bath here, right? And the idea of like BBB referring to Bed Bath and Beyond, whereas, Bye Bye Baby was referred to as BBBY. So maybe it's possible that, she just wasn't aware that Baby was gone. Like they just stole it from underneath her.
It says Etland Declaration. That's the quote, everything above it. And then it goes on, they're continuing on. And what she said was, there will be no reorganized operations if the company emerges from bankruptcy. And then the lawyer goes on to state, as Gov publicly and incorrectly claimed. So there will be. But my whole point of this is showing how distant she was from the CEO. Was not a part of the bankruptcy at all.
Yeah.
Yeah, and that's kind of evident too, because literally 2 weeks before she did the eToro interview too, right? Where she talked about a 30-year plan and women on the board, and literally 2 weeks later they file and everybody's like, well, what the hell did you give that interview for on eToro if you're filing for bankruptcy? And so it almost seems like there was a change of control. The CEO wasn't totally advised as to what was going on. Now, the curious part is that she is being, there is a claim against a lot of the board members. And I believe that Sue Gov is actually innocent in this. And the reason I kind of relay that is prior to her history, she worked with Eddie Lampert at Sears. She was recruited by Olshan and proxied onto the board in 2019. So she was literally there from 2019 watching all the share buybacks and everything go through. And then these guys, activists, come in, secure control of the company, and don't really involve her in the bankruptcy aspect. So whether Sue's guilty or not, I'm not sure. But the moral of the story is here that, as Kiki says to Pruitt, that the statement is incorrect. There will be a reemergence here.
And I'm glad you brought this up, because I actually haven't seen this. Second, the objection misrepresents Gov's role in Bed Bath's restructuring in the bankruptcy proceedings. Bed Bath has not indicated any role whatsoever for Gov. At best, Gov is a figurehead allowed to maintain her title while she observes others address the problems she and her predecessor created. So maybe that's kind of where like the RICO came in, is that say that those, because I've wondered what so Ryan Cohen put 3 executives on the board of Bed Bath and Beyond, and they tapped the D&O insurance for $10 million to hire lawyers. And it suddenly just dawned on me, if they were smart, which I'm sure they are, they would have gone straight to RICO instead of anything else. And so that might be how they were able to bypass things. It was like, look, they have poison pills and all these different things they can do. So we need to be able to bypass the regular structure of the company, because there's racketeering that's happening. So that's how it makes sense that she would literally get up there and it's like, nope, there's no plan, haha, because we didn't let there be a plan of reorganization. Like we hid Ryan Cohen's bid for the company. Like she was probably like excited when she was giving that editorial interview, and then come to find out that through Rico it was all happening under the radar. I mean, that's definitely a possibility in my opinion.
Yeah, I look at the history and say either she flipped and got caught with her hand in the cookie jar, so to speak, and then in bankruptcy was cast aside. Like, no, you just told your tale, you do your thing, we've got it all in control. And now obviously there's a claim against her and some of the other board members. So
this is going to be a spectacular bankruptcy.
keep on going down. Is that the end of it? Yeah.
That's just the end of that post. It's just showing you that Sue Gov was a non-debtor at May 9th.
Okay.
And then there's a post above this where, right there, I was just showing that, just click on the picture. It's just showing that the affiliate status was in docket number 1. So the whole bankruptcy, they were an affiliate. So somebody was in, control of at least 20%.
Well, wow. That okay. In case anyone wants a little TLDR, right? Remember, like, to be an affiliate, you have to have like 20% shares in the company or stake in the company. I don't know if it is. Hold up. Now all of a sudden
It's above. It was today's.
Okay, so the affiliate's definition.
It's in the post above, right? Keep going. Above just click on that post, and it's a comment to that one.
This one. Okay.
Right there.
Okay. Oh, whoops.
Oh, that's the worthless stock. Sorry, my bad.
No, it's all good. So it's
the
just
one below it. Where Bad Mojo is. The one we were just in. The very beginning post.
It was
click that post. It's that one right there.
Okay. Inside of this post.
Yeah, it should be the second one.
There we go. Okay, so just to come back here, so affiliate.
It's up. The colored one. That one.
Power to vote, right? Okay. So, I mean, I guess that could be 20% of the bonds. Or
no, all
actually,
the
bonds
HBC
just have
shares.
a lien, right? Yeah. Well, I'm just making sure. I'm just trying to steel man, I guess the opposite. You know what? Like, so it's because bondholders only can have a lien, right? Like they have a lien, but I don't know that they vote on, right?
I'm not sure about the convertible bonds that can convert to common stock, but regular bonds
like regular
don't vote.
Bonds.
No,
yeah.
they don't.
Okay. That's what I thought. So, okay, so that's really cool. So the fact that from day one there's been affiliates, which means there was someone involved that was more than a 20% shareholder, and like ABC was saying, if they're an 80% shareholder, and that happened within a 12-month period, which it could have easily, because just through HBC and what happened between Ryan Cohen's offer and actually even just from when he sold to bankruptcy, anything in that window was, that's less than a year. So easily could have acquired 80%. I mean, the dilution by HBC alone was 80%.
And if you're a smart activist investor and you know that you have a plan right up until including bankruptcy, and you know that the short sellers are going to react to a narrative of dilution, when are you going to buy even more shares? You're going to wait till it gets down to 25 cents, 20 cents a share. And that's why you saw the volume from mid-March go from 300,000 to 400,000 to 600,000 till we hit 989 million shares traded in one day. Yet we didn't even have that as an outstanding float. And so it kind of showed that the shorts were continuously attacking because the price was going down, but the buy ratio to the sell ratio was still outpacing the sell ratio. And so, therefore, how could the price go down if there's more buying activity? And so, therefore, my assumption would be is that some friendly was buying a shitload of shares who are very smart and businesslike at a very low price because they already knew how the other side was going to hammer this down to the ground.
Don't forget that what was it? I just forgot. Go ahead. I'll think about it for a sec.
No, it's just getting my wheels turning. I'm like, it's so crazy, like how far we've come. Like this is one of the most complex transactions, and when it finally comes out, it's gonna be amazing to watch the evolution of how we like discovered this transaction while it was happening in the background.
Now I remember. Don't forget that those shares, when they were delivered, were in book entry.
Yes.
Which, if you want to expound on what that would,
like directly into your name, like DRS into your name.
So, wait, if they were in book entry,
They can't
then
be shorted.
No, but wouldn't they have, like, wouldn't we have seen who they were going to in the filing, or was that possibly redacted?
Seems like it could be redacted, but
Well,
one of the PP shows back, I showed you guys that it said in there, delivered in book entry form.
and think about it, if you're being represented by a third party, all eyes will be on HBC. But really, there's a third party who got them via book, registered them, also has voting control. Because if you notice, the first deal with HBC was everything was warrants, right? Warrants had no voting capability. It was only when you converted them into common shares that you would garner the right to vote. Well, if a third party was being represented and HBC gave all those to that third party, then you secure all the common voting shares. And if they're kind of book plan, there's nothing that can be done. Like absolutely nothing. You're in control. You've got all the votes. You get to dictate the outcome of everything. And that's why I think when we were in court and there was kind of that whisper among the panel and the judges, or the judge and the legal counsel, and we didn't hear whose name they mentioned, but they said so and so's behind this. And it was kind of like a, oh. And so, to my speculation, that would be somebody who has a reputation in the industry, possibly like Carl or RC.
Yeah.
Go ahead.
Oh no, I mean it just. I mean, there was a guarantor, right? I mean, that's why the speed of the bankruptcy could go so fast, and the fact that it's like a guarantor that everyone's like, wow, like if you found out who this was, you'd be impressed. Like, I'm excited to find out.
The next post up at the top, I talk about why it could have been rushed, like why the bankruptcy was rushed. The one, keep going up above the GIF, that one. So this was talking about how like we had 117 million shares outstanding before the HBC deal, and then when we got into bankruptcy, the company reported 739, and Seed and Co had 782. And I was just dividing, both of the totals for people that like to argue, so I had them both. 15.8% and 14.9% is what the original, block retail outstanding is now of ownership of the new, overall. And so that would mean, all those shares that came from HBC, theoretically would be around 85% of the company.
Well before bankruptcy.
And then go down. And this right here this is the good stuff right here.
Why why would anyone own that much of the company of in common stock? We lost it all. It's worthless. Okay, settle down, Shill. Take a second and read this. Treatment of worthless stock. If any stock held by a 50% shareholder is treated by such shareholder as becoming worthless during any taxable year of such shareholder, and such stock is held by such shareholder as of the close of such taxable year for the purposes of determining whether an ownership change occurs after the close of such taxable year, such shareholder shall be treated as having acquired such stock on the first day of his succeeding taxable year, and shall not be treated as having owned such stock during any period. For purposes of the preceding sentence, the term 50% shareholder means any person owning 50% or more of the stock of a corporation at any time during the 3-year period ending on the last day of the taxable year with respect to which the stock was so treated. So why does that stand out to you?
Okay, well, let's just say it's one person behind HPC, and he has more that many, 50% or more of the company's vote, right? And the stock becomes worthless. Let's say so he's in control of the company, but the stock becomes worthless. When they were canceled. So that means at the end of the tax year, since they are deemed worthless and canceled, uh, those shares, uh, it's like he never owned them,
Mm-hmm.
and they won't be showing as ownership until the first taxable year following. So as long as they stay canceled, once they start up, like reissue the shares or whatever, it'll start as ownership. The ownership start.
So your TLDR of what that would signify, I guess.
If there is somebody behind HPC, like one entity or one person, and they're owning more than 50% of it, right?
Mm-hmm.
The change in control that affected or whatever, their ownership won't be
In
like
play
in play
until the new
until
ownership.
after they reemerge.
Yeah.
So like they wouldn't have to report that they own it, so we wouldn't know who it was.
Well,
I
it's
don't know
deemed
about that.
worthless, right?
It's deemed worthless though, so it says right. That's just the rule, because it says right. I can't read it because it's too small, but
Shall be. Yeah.
during any taxable year of such shareholder and such stock is held by such holder or shareholder as of the close of such taxable year for the purposes of determining whether an ownership change occurs after the close of such taxable year, such shareholder shall be treated as having acquired such stock on the first day of his first succeeding taxable year, and shall not be treated as having owned such stock during any prior period.
And for purpose of the preceding sentence, this term 50% shareholder means any person owning 50% or more of the stock of the corporation at any time during the 3-year period ending on the last day of the taxable year with respect to which the stock was so treated. Like basically, the stock was extinguished, but you still own the company. You're in control, although the equity is being extinguished. But because of this ruling, if there wasn't a reissuance of shares, in a sense, there wouldn't be a dual change of control. So you wouldn't have a prior control and then a new control, because that's the real thing with the Knowles is that you can't have two changes of control. And so if the stock is extinguished, you established yourself prior to them being extinguished as the change of control. Would that suffice when new equity is issued again to that same participant? I don't know, but this to me is very bullish. I think this is how they were able to slip into this and still preserve the Knowles. because I remember Jake was talking about how there can't be multiple change of controls. And the crazy thing is, if you look at the entities that are filing the post confirmation reports, they put the final decree deadline of December 31st, 2026, which is basically a 3-year window from December 31st of 2023. And so to me, that 3-year window, so long as they issue the new equity before December 31st of 2024, they're in that 3-year parameter in order to still keep the Knolls active. I don't know. Not sure I'm making too much sense with that. It's all new to me too.
Well, I was thinking the 3-year rule was applying from the date of purchase. So I was thinking putting it like at February 2026.
Yeah, it could be because they can change that final. The plan men did say you can change that date at any point. I just found it particular that all the post confirmation or the active entities have a 2026 date. Um, and I'm wondering if, because it used to be February 28th was the year end for Bed Bath and Beyond, I'm wondering through Deloitte and everything whether and how even Jake shared how some of the entities they stopped the books on the 21st of September and didn't do any more reporting from there. So I'm wondering if some of the entities have different taxable dates now. I'm not sure. Again, we need an accountant involved in this, but I think Kinky Sexy's landed on something that's very, very bullish in terms of the Knolls and the ownership. And what I boil it down to is HBC was really a mezzanine or a proxy for this third party to gain control of the company when the rest of the market thought it was dilution and some nefarious company coming in and making a shitload of money off of the stock going down. I think it was actually a change of control. And we can give you a million reasons why HBC, I believe, is friendly. One, they're a Canadian entity. Two, or originally a Canadian entity. Two, Carl leases office space to them. Three, they're also involved in the DJT ticker. They've invested heavily into that. Anyways, I don't want to get into all the politics, but to me, HBC is always being on the friendly side. I just don't buy into the smoke and mirrors right now. And what this really does for me is confirm that HBC was really a way of establishing control, because we knew that one party was actually hedging bonds. And so only 86% of the bond outcome was favorable, right? They had to do a cran down. And so dip financing, buying the bonds, buying the equity, I think they came at it from 5, 6, 7 different ways to ensure success.
And I'm still, my mind's just still fixated on if HBC that if SUGov legitimately didn't know what the real plan was supposed to be, and maybe even if Rico was already involved, and so it was like kind of a setup, and so they're like, hey Sue, like, are you okay if we death spiral finance your company? And she's like, yeah, sure, So little does she know, like, it's not death spiral, it's actually handing over ownership, but she thinks that she's, death spiraling the company. That would be really, really fascinating. We might not see that side of court, but I imagine it happened.
Well, why else would you see the lawyers in the deposition referring to SUGov as being distant and, just allowed to observe them fix the problems that her and Mark Tritton created? Like, it's pretty obvious.
Oh, yeah, no, I agree. And I think that this has been an attack for a long time. I mean, my one reason I was skeptical of HBC, I mean, one of many, but that, like, even them buying more shares, exercise more shares, like, if they pre-sold, if they were short an insane amount all the way back in, like, let's say that JP Morgan never bought back all the shares, or let's say that people were naked shorting when Bed Bath was still at like $44 a share, or heck, even when it was at like $10 or $15 a share, and they were just naked shorting the crap out of it. They could afford to, pay hundreds of millions of dollars if they had already stolen, billions of dollars worth of shares. But I think that maybe, I don't know, maybe there's a lot of changes happening. Maybe maybe this is part of, maybe HBC doing it was, I don't know. All I know is I really think that Rika is involved, and it makes a lot of sense that she giving that interview genuinely having no idea what was actually going on in the company.
Yeah. And, I don't think we're going to totally figure out the puzzle, but I think we've discovered enough to, one, know that there is a reemergence coming, one, that the ticker is being preserved. The Knolls have been saved as well. There has been several of the debtors businesses being carved out. I believe that there was a change of control well before bankruptcy. And if anything, it would have been consummated in under the protection of the bankruptcy. And really, all we're waiting for right now is either a foreign entity to come in and apply Rule 305, which has a better outcome for the creditors, or we're waiting for a third plan to drop. And we know that the courts basically gave the estate the ability to drop a new plan at any time without a court approval, without any votes required. And so that's really our hope, is that a new plan drops, or Rule 305 shows up and says, guess what? We have a better outcome for the creditors. And then the New Jersey courts would have no ability to refuse that. They would literally have to pass it on to that different jurisdiction.
And when I talked to the plan man, they hadn't actually filed the case against the board, right? So how that changes everything is something that they weren't even, I don't know if they were aware of even when I was talking to them. So there's been some huge changes. I mean, when I talked to Olshan, the same law firm that Ryan Cohen uses, and Pulte, they said the only way that things could change is if fraud was found on the board, and it was found, and I reached out to them again. They didn't reach back. So it's like, I think things are in control. I mean, the same thing with Kirkland Ellis coming back when MJL was there saying, hey, we need shareholders. So then suddenly they're back in the picture. I think,
what was your initial thought when you were talking to them? Did you think they were misinformed, or did you think they were just trying to push you in a different direction?
To be honest, I thought, and still kind of think that, especially Goldberg, it was just like the cleanup crew. Gordon seemed smarter, but still like it was kind of weird. Like, I don't know, like he was also at a certain point, like kind of checked out. He's like, I'm making a lot of money, I don't really care. But like, then he would just, I don't know, like he didn't know so many things about the bankruptcy that are like really important. I just remember, like, I mean, I could go over, I mean, it was a long conversation. We talked for like an hour and a half straight, and it was like a very fast paced conversation. So, I mean, like I was like, hey, if, the ticker could be worth money, right? And that should be liquidated for the estate. So do you know where the ticker is if you needed to sell it? And he's like, I have no idea what you're talking about. He's like, I don't know where it is. And it's like, okay, yeah, like I thought, it was pulled into the trust at the beginning. It just seemed weird when there were certain, I first started talking about Ryan Cohen, and I wasn't trying to make myself out to be a huge Ryan Cohen fan, because like obviously they're trying to sue him. But then when he's like, yeah, if this doesn't go through, I'll just sue him myself. And it was like, wait, what? And so he was like all excited. He's like, oh yeah, we're just looking for people with deep pockets. And I'm like, okay, that's weird. I was like, well, if you want deep pockets, I mean, what about Jake Friedman? He made like 160 million or whatever. And they just both got angry. It was like the weirdest thing. And then to see, Gordon actually, he was the one who filed the complaint against the board. But like, I haven't read the whole thing yet. I really need to. I've been focused on the tokenized shares lately, and because that's been throwing me for a loop. But it really just seemed like they were trying to make Goldman Sachs and JP Morgan not look like they were involved in the fraud at all. It looked like they were trying to dump the entire thing on Gustavo. And that just really, That really seems weird. Like, so the same vibe I got reading that, as far as them trying to cover for J.P. Morgan, I got that same vibe when I was talking to them. So that's my only fear right now, is that J.P. Morgan and Goldman Sachs are being let off the hook. I don't know that that's true, but like, they, in my opinion, were the master architects of this heist, and they should be on the hook for at least $3 billion of that problem. And so that's why I sent another demand letter. I didn't file anything just because the demand letter, I think, is enough to hold people accountable.
Doesn't this scream deal has already been made?
It does. It does. I'm just but like, think about that though. If our shares, let's say that the bond price, right, just like started rocketing today, right? Bed Bath bonds, like, they don't even have, like, there's like none for sale, and the price just went really high, right? So the bonds are probably going to be paid out in full. That's what I mean. There's no other reason people would be buying tons of bonds right now, because they're only scheduled to get 2.5%. But so something is happening, and if the bonds are going up, because that means they're getting more than 2.5%. So if they're getting more than 2.5%, it's probably because they're getting 100%, and it makes sense. The money would come in. It could come from BYM Mellon. It come from a lot of places. They could have rewritten bonds. They could have, there's all different ways the bonds could be filled out, and so then we would get our shares back. But if there's $3 billion, that's like, I don't know, what is it, $12 per share or something that like could be coming to us? Or what if it was more than that? What if it was $12 billion, right? That's like a substantial amount of money. And I just hope that they're not letting them off the hook, because, one, there should be accountable. Two, that cash should come to us.
I think you're going to be surprised. I think you're going to be surprised because of the third-party releases. Obviously, like Jake said the other night, it's too bad that they won't be held more accountable. But these third-party releases, what was the key words? Substantial and a maximizing.
And fair it was.
Yeah. Anyways, I believe it's going to be well enough that in the end, I believe that Ryan's going to get Bye Bye Baby for free. And based on his customer-centric ability and Teddy and everything like that, I think he's going to have more than enough money to turn this company into a masterpiece. And I do believe the estate, too, has been compensated for the fraud. And I think really the plan man's goal right now is to increase the clawbacks, the claims, and go after any other nefarious party, except the third-party releases that have already come to the table, sat down, negotiated, and issued a settlement. And I think that's going to be the maximizing recovery for the shareholders. And I think it'll be a substantial amount. And then the equity itself of what the long-term business is going to be the generational wealth for everybody if they can hold on.
And I think we'll find out soon, too. As far as timeline, I think that the case today, the case Friday, and then Bed Bath has a court hearing, I think, next Thursday. And I think it has something to do with shareholders. So if if Friday goes well, then that might be when everything gets confirmed about like exactly when shares get listed and all that, or whatever. Might not happen immediately. There might be like 4-day window or 10-day window or whatever it is. But we might at least get some information soon after that of what's going to happen.
Yeah, I've been waiting for tomorrow to come.
Yeah.
For real. The bonds mature tomorrow, so I really want to.
Oh yeah, that's true.
I didn't know
tomorrow.
people were buying them, so I'm curious to see what happens tomorrow. And then Friday, you have Ryan Cohen's deposition or whatever.
Yeah. And if I was understanding what Jake was saying, like I think there is a chance that like the state pays the bonds like 2.5%, and then BNY Mellon has to pay the rest of it. So that's why the part of the plan has to do with like the money that the company has, right? So it might only be 2.5%. But if BNY Mellon is a third party release, like that might be part of the deal. Is like, hey, you have to pay the remaining 97.5% of the par value.
Or because I foresee the 2024s being paid off in full. They're just going to strike it cash, pay off any holder of 2024s. There you go. You're out of the picture. And then because the business is reemerging, so to speak, as a going concern, they're going to keep the 2034s in place and the 2044s in place and give a cash settlement of up to 2.5%. But a lot of those notes in the 34s and 44s, because of the October, November, and December bond indentures, they are convertible. And that's why 86% of all bondholders agreed to only 2.5%, because they would have an understanding that if I only agree up to 2.5%, well, guess what? I'm still owed 97.5%. And if it's equity and people like Carl and Ryan are behind this, I want my shares instead of just 97% more payout.
I mean,
So
we did
that's how
see a Teddy in the background, in the, that was very curious. And let's see, who is this? Someone in the chat, Resolve. He says Friday is International. Oh, that's Beer Day. I thought it was Bear Day. Oh, but beer, that is an emoji. So that's fascinating.
I don't know. I'm getting away from dates, guys. I'm curious to see what happens with the bonds. I'm curious to see what happens with RC's dismissal on the claim. But yeah, I've been let down too much with dates.
Me too.
Yeah.
Which, speaking of which, one date that the 17th, that was crazy when the tokenized shares dropped, and I'm not sure why other people, like a lot of people, haven't been talking about it, but it's that, on the 17th, when those tokenized shares dropped, it pulled the price down more than when GameStop did a 75 million share dilution, and that was before they had raised the money, right? So they had $2 billion less than they did now. They did a 75 million share dilution, and still it didn't pull the price down lower than it did when these tokenized shares hit. And so I've been trying to figure that out, because
those shares, Michael, the 45 million hit the street. The 75, I don't think hit the street. I think they were sold to a private party.
But either way, like, just
having dilution,
having an open ATM, just as far as like market sentiment and everything, and like having an ATM open and having 2 billion less, why would it hit a floor of like $23 and then come all the way down to $22 after these tokenized shares hit? That doesn't make any sense. And so I've been trying to track down how that happened, and it was like also interesting that there was a concerted attack on Ryan Cohen. People like Professor, the short destroyer, he was saying that it was from what Ryan Cohen was tweeting, that Ryan Cohen is, has lost it, and now he's affecting shareholders. And then you see, that same time, you see, whatever his name is, the guy with the dirt bike helmet, he's like, oh, like, the chart's telling me that, GameStop's going to go down to $8, even though just the cash on hand that GameStop has per shareholder is like $9.4 per share. So there's like no way it could get down to $8, because there'd be an arbitrage to buy it at $9, right? And like the actual book value, when you look at the actual assets they have, that puts it at, $12.50. So when you see all these things happen at the same time, this concerted attack, I've been trying to figure out what's going on there, because, I'm sure they knew the attack was coming. I don't know. But if there's something like legally or whatever we have to do, because those tokenized shares shouldn't affect how our U.S. stock is trading. Like, they shouldn't. But there's a lot of loopholes in how the system's set up, and I think they are.
Wow.
Do you,
I'm going to sign off, Mike.
yeah.
But Kinky, thanks for joining, brother. Thank you for putting this on, Mike. And I don't know if you'll be around on Friday, but I'll try and hop on Friday.
All right. Sounds good. Well, thank you so much
Good night.
for
Appreciate you.
joining.
Yeah, well, we'll see you guys Friday. Have a good day in the markets tomorrow, everyone.
All right.
Cheers,
Take care,
brother.
man.
Cheers.
Do you have any other thoughts, Kinky, before you
No, I'm ready to go.
You're ready to go? Sweet. All right. Well, thank you for coming and explaining some stuff. So I'll just cover a few things before I sign off, and yeah, I'll catch you later. All right. Sweet. Well, lots of exciting things. Try and think of what else we didn't cover. I mean, I think if these acquisitions are happening, right? I mean, it is kind of curious that I post that. Oh shoot, Koss posts about custom skins or for Game Boys, and then suddenly, when I tie it to G America, they take their post down. So I think that all these acquisitions, right? Larry Chang said that he would not raise capital unless he had a very high return on investment opportunity that he wanted to do. And they raised a lot of money. I mean, $4 billion. I mean, it's not just costs that they could buy, right? They could buy a lot of companies. But, I was, part of my thesis was I figured at any moment they could, and I didn't know that they couldn't because of the Boston Consulting Group lawsuit. So that's out of the way. And even with these tokenized shares, I think in the near term, it's pulling us down. But if anything, that actually gives us a better entry point. I mean, I think that tomorrow it might dip down. Well, it might just stay where it's at. And then Friday, once the case is officially dismissed, that means that everything's clear to do the transaction, and we might not see that till the 8th. But just like with the bonds, when the writing's on the wall, how things are going to turn out, you start seeing people react to it. So we'll see when that happens for GameStop. I do like in the money call options, and I mean, I guess that's something. Maybe I should just go over a little bit. Is first off, I do like weeklies, but I should, with the disclaimer of, once I'm up 20%, that's when I usually just sell if I'm messing with the weekly. So sometimes there's opportunities where paying extra for time, if I don't imagine that I'm gonna get more than 20%, but that just a little bounce would get me 20%. I mean, we're talking sometimes 1% move in the stock will then get you 20%. So or more like, oh yeah, 1 to 2% maybe. I'd have to calculate. I mean, it all depends on what the implied volatility and all that is, and exactly how close to the money you are. But that's when I do them. So I don't just diamond hand weeklies. I mean, I try not to. Sometimes if I think there's going to be a catalyst, I do, and I've gotten burnt pretty freaking hard. But the options are pretty powerful, and it's something I guess I haven't really explained. Is just what an option is, right? You're buying the right to buy the stock at a certain price, and you are paying a certain premium for how long you want to hold that right for. That premium of time, which is called theta, is multiplied times implied volatility, which is a factor, basically how volatile things are, the kind of the expectations of how it's going to move, that extra premium gets added in, and that's like a lot, right? So for me, I like to look, like if there's a stock, I want to kind of reserve the ability to buy it, right? Like I wish I would have just like left this portion when I was up really, really well a couple months ago. I bought a pretty big option position in IEP, I bought like 12. They were like $12 strike prices because I wanted it in the money, but they only had so many. And I wanted it out pretty far because I wasn't sure how long things would take. But since the implied volatility was so low, that means that the premium multiplier that it adds to time was as low as it could be. It was, I mean, the implied volatility was like 0. So I was like, cool, it's the best bargain. And so for GameStop, I got burned pretty badly when the tokenized shares came out because I wasn't at all expecting that it would, one, get near max pain, which was 25.50, or I definitely wasn't expecting it to go below that, right? And even scaling out and whatnot, I definitely acted too soon, too late, and I should have stuck to my thesis, right? I'd sold some, I bought back in, thinking like, oh yeah, but I just got I underestimated. I mean, we're going up against people that are very powerful and have been doing this for a long time, and they want our money, and they're smart enough to take it, and they have they can pull the levers of the whole market substantially. I mean, even when Roaring Kitty started tweeting that, the IWN-M, which is a big ETF that holds GameStop, I mean, that was going up as well. So, I mean, that's one reason why they let it run, but they have a lot of ability to mess things up through settlement. I mean, they can delay settlement for at least 35 days with no problem. And so imagining in the short term things are, what something's going to do. I mean, for me, I knew there was a lot of call options at 30, and a lot of people would probably exercise their call options, which means that you buy. So a call option is buying the right to buy a share, and you can just sell that right? If the price goes up, say you want the right to buy GameStop at let's just say right now you want the right to buy it at $22, and you pay $1 for that right. Well, let's say it goes up to $23. Well, now that the right to buy it at $22 is now worth $2. So you actually doubled your money, right? And so you can just sell it. You sell that right to someone else, but you could exercise it. And so I knew that if someone was holding 20s, the right to buy it at 20, they might exercise it. They might actually just buy the underlying stock. People would still probably do that at 25, but a lot less people would do it at 30. And so I knew that was, for a lot of reasons, going to be kind of like a hard barrier. But the true value, so that's why I'm more of a fundamental investor, right? I compared it to other stocks in the same ETF in XRT, and that came out to like $50 to $60 for assets, cash on hand, revenue, everything except for, actually net income. But one, I think this quarter is going to be good. And two, if they even just bought bonds with the, $4 billion, they would have plenty of net income. I don't think they're going to do that, but just as like a baseline, like if, and so I just assumed that it getting to $50 to $60 was not a problem, which I still don't think it is. But we're not in a fair and transparent market, and they can just keep doing what they've been doing for a long time. And so you have to have an exit plan, risk management, and actually be willing to wait, right? I should have just what I sold, I shouldn't have just rebought back in. I think I rebought back in later that day. It dipped like, 2%. I was like, cool. I sold the top, bought back in. I'm super smart. Yeah, no, I wasn't, because I bought back in, and the implied volatility was still actually pretty high. So then the implied volatility came down, which makes each option worth less. And then the price just started going down as well, the share price. So if it had crossed through that, though, I mean, that it would have been the pressure of those options would have kind of pulled the price all the way up to 40, which would have been pretty awesome. But so with the call options, it's something also. It's not that you YOLO everything you have. I'm saying that as what I want to believe, not what what I did, obviously. I mean, but it does help you get exposure to things, right? Without actually taking sometimes as much risk, right? And it's okay to have a small portion. I mean, they say, maybe 5% of your portfolio could be higher risk assets or investments. So, it's good to have shares, and, that should be the vast majority. But locking in that right, especially if you've spent so much time with GameStop. I mean, how many people are going to be surprised if tomorrow Koss announces that they're being acquired by GameStop? Really? Like, you're going to be like, oh, I'm totally blindsided. Never imagined that happening, right? Like, I mean, I think people have probably been talking about it since 2021 or 2022. I mean, who knows? I wasn't around back then in this in the GameStop kind of situation. So, we kind of, so we've been following it, and then it's just a matter of like, okay, but when could they possibly do it? When possibly could that catalyst happen? And if you know the time frame, and then you would know the direction, then options can be a very powerful tool to help you, make more money, right? A 10% move, if you buy the right options, can make for a 10x or for a 4x, right? And so that's why I've been trying to figure out how options work. And so not saying to buy options tomorrow, but if you feel that because the implied volatility is lower than it's been in a long time, and you think that now that what was stopping them from using that $4 billion to buy high return on investment assets, then it's just a matter of the timeline, right? I do prefer in the money. So the one, especially if they're shorter dated in the money, if they're longer dated, I still like close to the money at least. So, for me, I think that if I'm right, I've put a lot of time and effort into, I think that if something happens on the 8th, right? Oh, that makes the 9th actually, I don't know if there would technically be an announcement or it might be after hours. So now that I know better, I mean, I think there would be more of a run up. So, the call options, from if you bought some earlier in the week for the 9th, I think they might still be good. But if there's a pop, what you can do is roll those over. You can either just sell them and then buy further dated ones, or there's actually a process to just roll them over. I find it easier kind of just to sell them, but also definitely not an expert. So at this point, the shortest then, if the 8th really ends up being some kind of catalyst that you would kind of feel comfortable with, maybe the 16th, right? So something like a 23 or 22 strike call option for August 16th would be something I would be looking at. Or you could get after earnings, right? Maybe like a $25 strike price. Earnings is supposed to be September 4th. So September 6th, that's a little bit close to after earnings. But the thing is that as it approaches earnings, there's the implied volatility will start going up. There's just more kind of buzz around the stock. I mean, even people who aren't, involved in GameStop, people look at when there's earnings season and, they might be like, oh, well, they hadn't been looking at it before, but now that it's just coming up, they just are going to check into it. So that increases the the implied volatility. And so your call option, even if it, I mean, you're going to lose money on with time, but as you approach earnings, it's possible that that implied volatility will go up and the value of your option could increase substantially. The implied volatility, I think right now is like 70. We got to like 200 when things were going crazy, maybe even over 200. I don't know if that would, I mean, depending on which option you get, I mean, that could possibly double it. I mean, if you're a whale, right? So this isn't advice for Ramez. Don't rely on increasing implied volatility, because like if you have a lot of call options, I mean, you can't really extract that that value that might be there. But you know, if you're playing a smaller position, then that can actually be good. It's something I don't typically like to bank on because I think that market makers know that we like to bank on things like that. And if those ones are out of the money, then it's like it's more tempting for them to just try and collect that premium from us, because Citadel writes a large portion of the call options. So yeah, what I'm thinking is tomorrow it will probably be the lowest the price we might see and the lowest implied volatility, and that might be a gift for anyone that's been paying attention this whole time. And yeah, I'm really excited. This has been quite the adventure. I was not expecting to do most of this, but I have met a lot of wonderful people, and I think we are changing the world. So keep being awesome, and good luck. Good luck in the markets tomorrow. And